What is Zeniq? Zeniq in short can be defined as innovative products and services based on fintech and blockchain technologies. To understand what Zeniq is, you first need to know the meaning of these two exotic-sounding words. Fintech. Definition. The term fintech defines companies that offer innovative solutions for the financial sector, relating to financial instruments and related services. These companies use the latest technical possibilities to provide modern financial services, most often via the internet. The goal of financial technologies is to improve the efficiency and availability of services offered on the market. Startups are often incorrectly referred to as fintechs. However, these, according to the definition, are companies in the first stage of development, at the stage of business organization, creating a given product or service and usually seeking financing. In this sense, not every startup is a fintech, and vice versa. The fintech industry is developing excellently in countries with friendly regulations for conducting innovative projects. This group includes Inter alia, France, Austria, Malta and Germany. It is worth noting that in terms of innovation, the European Union is ahead of such economies as Chinese and American, giving way only to Japan and South Korea. A characteristic feature of fintech companies is a business model that focuses on one specific service and flexible adaptation to customer needs. The fintech sector includes, among others, online payment service, e.g. PayU, PayPal, Blick, e-banking and mobile banking, e.g. IPKO, alternative banking, e.g. Revolut, online loans, e.g. Vivas, Wonga, digital currencies, e.g. Bitcoin, communication solutions using payments, e.g. Uber, MyTaxi, online exchange offices, e.g. Synctures, Walletomat, internet comparison websites and auction platforms, e.g. Tseneo, Allegro, mobile payments using HCE, e.g. Apple Pay, Google Pay. Fintech is a word that revolutionizes the financial market and is repeated more and more often in the context of changes in the financial sector. What are the differences between fintech and a bank, and will it really change the world of finance? You will find out about it in the next episodes, so don't forget to subscribe to the channel with the bell marked to stay up to date. We have already covered fintech, so now it's time for blockchain. A blockchain, or blockchain, is a method of storing a list of entries, which cannot be changed easily after they are created. This also applies to the list. This is done by using several concepts from cryptography, including digital signatures and hash functions. In very basic terms, a blockchain combines the following two ideas. Given some data, it is easy to calculate a checksum over the data. Special hash functions can be designed to calculate this checksum. These functions can be designed to return a value that always has the same length, which is not dependent on the length of the input. This value is called hash value, or message digest. The functions also have another property. Given the same input, they must return the same output, hash value, message digest. In addition to the hash values, a block typically also contains a timestamp and some payload. Each block uses a digital signature, which allows detecting any change in the data since the signature was made. When new blocks of data are created, the newly created block will also contain the hash value of the previous block. Photo of blockchain. In most cases, a blockchain is managed by a peer-to-peer network. All peers use a common protocol that specifies how they should communicate with each other, how a new block is created and validated. Once recorded, the data in any given block cannot be changed easily anymore. Changing the block means all the blocks after it need to be changed as well. Depending on the protocol, this will require a majority of the peers, or even all the peers, to agree. Blockchains are secure by design. Blockchain technology is used where keeping a correct record is important. Use cases include medical records, identity management, food traceability, and voting. Blockchain was invented by Stuart Haber and Scott Stornetta in 1991 as a means to assure the integrity of digital records. Haber and Stornetta launched the world's first commercial blockchain, Surety, in 1995. In 2008, Satoshi Nakamoto included as references 3 and 4 of Bitcoin, a peer-to-peer electronic cash system, the two papers by Haber and Stornetta to serve as the public transaction ledger of the cryptocurrency Bitcoin. Because of its blockchain, Bitcoin became the first digital currency to solve the double spending problem without the need of a trusted authority or central server. The Bitcoin design has inspired other applications. The term blockchain is described to most of the people already known free encyclopedia Wikipedia, and it will be the source of the information I will present. Blockchain is a blockchain, or it can be defined as an information storage architecture in a way that guarantees the invariability of historical data. Blockchain is the primary cryptocurrency environment to store transaction data. In other words, it is a decentralized and distributed database or transaction or event register, functioning as an increasing one-way list of records called blocks, having links to previous blocks created using cryptographic functions and timestamps. The architecture stores data, e.g. of the accounting type, transactions, payments, other accounting entries, encoded with cryptographic algorithms. By associating blocks in a chain, where each successive block stores the hash of the information in the previous block, the information in the blocks is only writable during block creation and impossible to modify after the block is made public and distributed. History. For the first time, the technology behind blockchain was described in 1991 by Stuart Haber and W. Scott Stornet and concerned the time stamping of documents. The system used cryptographically secured block strings to store timestamped documents. In 1992, the hash tree was introduced into the technology, making the system more efficient, allowing the collection of several documents into one block. The technology did not go into use and the patent expired in 2004. In 2000, Stefan Comst published the concept of a distributed ledger of transactions designed to allow access to public trust financial data generated by internet banking, online commerce and e-commerce. The main assumption is that each book trustee is independent of the others. In 2004, Hal Finney developed the RPOW system, reusable proof of work, which allowed users to exchange tokens signed with the RSA key, which were created as a result, proof of making certain calculations. In 2005, Nick Szabo published the concept of the BitGold virtual currency based on blockchain and the concepts described above. In 2006, a similar concept of a currency called B-Money was published by Y-Dai. The first application, combining previous technologies, and at the same time a common solution of this type, was made public on November 9, 2008 under the name Bitcoin in the form of white paper documentation by a person or organization known as Satoshi Nakamoto. In 2009, the public Bitcoin network was launched and the first block aired. In 2014, the Ethereum technology was released, which is a blockchain 2.0 technology that introduced blocks to the ability to run program code, called smart contracts. In 2016, the Linux Foundation with 30 members, including Guartime, Swift, R3, Consensus, VMware, Blockchain.com, IBM, started working on a universal blockchain platform called Hyperledger. Transactions. Transactions are digitally signed using public key cryptography using elliptic curve cryptography, ECDSA, and are public although users are anonymous. The transactions are distributed in nature, which means they are not monitored by the main broker. They are processed by computers on a peer-to-peer network which does not verify transactions by using central computers. The transactions are called nodes and, when validated, are added to a replicated and time-stamped transaction log called a block. Transaction processing is not free. Architecture. Structure of Bitcoin blocks. In fact, blockchain is a kind of decentralized and distributed register of transactions in a distributed network infrastructure. One of the key goals of blockchain is to maintain a joint and collective ledger of transactions in digital form, distributed over the network, in the same copies. Network. Blockchain networks often operate on the basis of a peer-to-peer, P2P, architecture with varying degrees of advancement in the functioning of the network and node specialization. Each device connected to the network can participate in the transmission and authentication of transactions. String, register. One-way list of records, blocks, with the possibility of adding new blocks only at its end, related to each other in such a way that each subsequent block contains the timestamp when it was created and a link to the previous block, which is an encrypted, summary, hash, of its contents. Blocks. Block is the basic building block. It consists of a header and data, transactions. In the header we have, among others, a saved reference to the previous block in the chain, its hash, the timestamp of the block creation, and the Merkle tree root. The data section contains a certain number of entries with transactions. The block size depends on the specific implementation and the characteristics of the implementation. For example, the size of a Bitcoin block can be up to 1 megabyte, according to the specification. Bitcoin, building blocks, properties, transparency. Transparency, networks using blockchain guarantee equal access to data to every network participant. Anonymity, by replacing user data with identifiers within the network. Independence, blockchain technology based on an encoded cryptographic structure, does not need any intermediary institution that verifies transaction data or confirms its participants. Security, resistance to cyber attacks. Transactions stored in the blockchain are irreversible. Any attempt to change one block changes the entire blockchain that follows it. In the event of an attempted fraud, changing or introducing an unauthorized transaction, the blockchain nodes in the verification process will discover the non-compliance of the copy with the network records, refusing to include it in the blockchain. Quote, efficient. Thanks to a distributed ledger that is shared among network participants, time-consuming reconciliation of records can be avoided. To speed up transactions, you can save a set of rules in the blockchain, the so-called smart contract, and execute them automatically. Usage. One of the applications is cryptocurrencies, e.g. Bitcoin. Blockchain is a system on which Bitcoin is built. Bitcoin cryptocurrency is an application built on blockchain, not the other way around. The most popular and most common application of blockchain technology are cryptocurrencies, Bitcoin, Ethereum, although it is gaining importance in many other applications in many industries, e.g. the Internet of Things, IoT, or distributed autonomous organizations, DAO, i.e. autonomous distributed organizations, and distributed ledger technology, DLT, i.e. decentralized accounting databases. Known blockchain application areas: financial sector, ledgers, cryptocurrencies, international and interbank transfers, Ripple, Coinbase, Binance, currency exchange, payments and peer-to-peer loans, a global network of money transfers and loans, eliminating intermediaries, ABRA, BTC Jam. Healthcare sector, e.g. using blockchain to securely store patients' medical records. The use of blockchain technology in healthcare. Votes and referenda, distributed, undeniable, and non-editable, and automatic counting of votes with full history, follow my vote. Blockchain applications in elections. Stock exchange transactions without intermediaries and institutions. Internet of Things, tracking the status, history, exchange of events. Example: filament, land registers, bypassing notary public and land and mortgage register courts. Trade, decentralized markets, transactions concluded without intermediaries and institutions. Sale, sharing and rental of property, open bazaar, Slock.it, electricity trading. Prosumer recipient, without intermediaries. Distribution and production of energy, transfer to blockchain of settling energy transport, energy meters, energy producers, e.g. people selling energy from photovoltaic cells, issuing certificates and analysis, LO3 Energy, Brooklyn Microgrid, solar change, register of car owners and purchase and sale history and their insurance. Share books, transport, rental of rides, private drivers, sharing rides, transport of people and goods. Thanks to blockchain and transparency, it is possible to bypass intermediaries and state regulation. Arcade City. Identity and its verification, distributed person identification systems, digital signatures, authorizations, reputation, unique ID, one name, world table. Data storage, trusted, distributed, fault-tolerant and integrity-resistant data storage systems, NXT, PeerNova. Smart contracts, automatically concluded and performed contracts that are not controlled by anyone, but everyone, within the blockchain, trusts them. Automated supply chains. UBIMS, mirror. Gambling, game systems, predicting events, anonymization of players, transfer of winnings, achievements, own currencies in computer games, prediction systems, e.g. of the opponent's movement, augur, deckbound. Document digitization, storage of counterparts in the form of smart contracts, storage of scans, counterparts in the form of data files, guarantee of non-repudiation. Example: storing receipts in a blockchain for warranty purposes, Colu. Identification, tracking of luxury goods, tracking works of art, diamonds, watches, collectibles, Everledger, Block Verify, Chainlink. Government services, taxes, contributions, mortgages, deeds, land registers, PESEL, NIP, etc. BitNation, Showcard. Education. Register of students, grades, results and certificates. The importance of blockchain in the economy. Blockchain technology, as an innovative solution, plays a huge role in the economy, thus contributing to economic development. The first industry to recognize its potential was the financial market. Since 2014, a continuous increase in blockchain interest has been observed and cryptocurrency technologies are constantly developed and improved. 35. Work is underway in the fintech industry, combining finance with technology, and the insurance industry is developing its own insurtech technology. Such a dynamic and effective development of the blockchain industry is beneficial from the point of view of entrepreneurs who have so far been looking for optimal solutions in the field of data management in their daily operations. The constant expansion and development of this field affects the growth of the economy as a whole. According to a report by analytical company PwC, blockchain technology is expected to bring an additional $1.76 trillion to the global economy by 2030. Also in the traditional financial industry, new opportunities are noticed brought about by the described technology. In 2015, the R3 consortium was founded by banks and companies from the fintech industry, whose goal is to develop blockchain technology. Importantly, this consortium included, among others, Citi, Bank of America, Morgan Stanley, HSBC, Barclays and Goldman Sachs. In July 2016, Citi announced that it had developed its own cryptocurrency, Citicoin. On the other hand, the fintech startup Chain.com received $30 million in funding to build a solution that will enable the transfer of various valuable assets online, such as loyalty points or financial instruments. Quote, another industry that has noticed the potential of blockchain technology is energy. Blockchain is ideally suited for the settlement of energy purchase and sale transactions between small producers, households and their customers, energy recipients, also dispersed, for example, electric cars. Currently, governments of many countries are investing huge amounts of money in the development of technologies that use blockchain. There are also hundreds of startups that raise money for development and research. The World Economic Forum places blockchain technology in top 10. Now consider whether the bank is honest with you. When you entrust your savings to a bank, are you 100% sure that they are safe there? An institution such as a bank is required to obtain as much information as possible about itself before making any transaction. You've probably come across the abbreviation KYC, which was created from the first letters of the English words, Know Your Customer. When opening a bank account, we must provide a lot of personal information that may be used against us in the future. If we have an account in a traditional bank, information about our place of residence, the number of children we have, the workplace, the amount of remuneration we receive or what we spend our earned money on, in various situations, is transferred without our knowledge to various recipients. One of such recipients may be the tax office which, in the event of inaccuracies, issues an order to block all funds, regardless of our situation. The bank is not an institution of public trust, the bank is an institution focused only on profit and at our expense. In extreme cases, our money may be blocked for some reason. The bank has the right to decide on its own to block the account, or at the request of entities such as the tax office, social insurance institution, customs chamber, prosecutor, court. The bailiff can block or collect your funds overnight without any information. And here it is not about rightness whether someone is at fault or not, but about the very fact that the institution to which you entrust your savings without your consent may take your money or block it against yourself. Fortunately, a new chapter in history is beginning that will put you in full control of your funds. And only you will have access to. In the 1990s, Bill Gates said, "The world needs banking services, but it doesn't necessarily need banks." Are his words just right?
In this material you will find a lot of relevant information about the Zeniq and Safir project. Remember that the materials contained in this study are informative and do not constitute an investment advisory service. Therefore, we are not responsible for any loss related to the Zeniq project and Safir's benefit plan.
If after watching all the material you have questions about Zeniq and Safir, post them in the commentary below this video, and we will answer each of them in the next episode.
Also, don't forget your thumbs up, and if the channel isn't already on your subscriber list, then you know what to do next.